This is gold, and many thought that gold could not break the way it broke on Friday, but it did. It did. Not only that it did, it actually crashed through the 200 moving average. And I've been telling you to prepare for this panic slide, and I think it's on. I think this panic slide, it's on. It is on. How far will it go? I can't tell you. I do see the major support here at 4,000. I would imagine if we crack under this level, the support is going to come in at 3900s or so, or 4000s. And it might do the job of basically holding the slide. Here's one wave for you to consider. That's an A, that's a B with an A, B, C, D, E done. So we go down with a 1, 2, 1, 2, 3, 4, 3, 4, 5. So there, as you can see, further falls are coming. That looks to me quite likely. Yeah. What I definitely don't see at this point, I definitely don't see this now. No way, no way. Although anything could happen in the markets, all the odds are pointing to this. So you got that panic spreading because the 200 moving average gave way. So you got a lot of players who begin to doubt the bull run in gold, but they'll regret because even though it might still take some steps away from the 200 moving average, I doubt that it's going to crack very badly under 4,000. Yeah, it holds at 4,000, 3,900. It begins to inch its way higher. It comes back to 4,500. Get ready. It's going to go. It's going to go. Okay, but we are not ready yet for that big move. Right now, we're looking down. It is almost certainly going to continue to be pushed down by the selling force, and that is the daily. I would just continue to work with this one. Okay, there is, of course, a reading that the B is still ongoing. It's rather complex what's happening here. It's not so friendly, if you like, in terms of yielding itself to a very neat set of subdivisions. So that's why I chose to work with the B ending here, but it is not impossible that the B is still ongoing, which means that it will prolong the entire correction like that. But I've been advocating looking at the possibility that we will have that panic slide that will go and crack under the bottom and will create, if you like, a situation where a lot of people give up, and that will be the moment that the market will basically hit bottom and start running higher. Now, there was I mentioned this analyst. I don't think he's working anymore. Many years ago, he used to combine both Elliott waves and Gann principles, and he observed some very interesting patterns in the markets, and I learned from him. And he used to say 3 drives to a bottom or 3 drives to a top. So what it means is, I think, is exactly what we are seeing here. Do you see? Do you see? How about another drive, meaning another push down under this? So you get 3 drives to a bottom, and then you got your bottom, and then boom. It seems to me that could happen this time. Okay, we have to be patient. This is coming. Let's have a look at silver. As silver cracked as well. In the case of silver, the idea of my ABC is still alive. Right now, if I go with an extended B, yeah, there are 2 options. The B ended here. We are now in that C. Yeah, there is not much time left for waiting around. It's now going to crack and it's going to break. It's going to break under 60. It's going to go to 50, at which point it's going to be mega buy, as far as I'm concerned. I can't promise you it's going to go that low. Alternatively, no, we are not ready for that big C down. What we are doing, we are going to continue to go sideways. We have seen the A, we have seen the B, we have seen the C. We are working on finishing the D. That's all. Right now, it's just going to finish the D. And we will know that that is the case as long as it doesn't break this low. Okay, as long as it doesn't break this low, it bounces back. It takes 2-3 weeks to go sideways. That's probably our E leg, and that be very careful. Be very careful. Third chance is going to break. Okay, again, I can't guarantee, but the pattern at that point would look complete. Let's go to the hourly. You see, we came down in impulsive manner. No problem, 5 legs. Then you got your A, you got your B, you got your C, right here. You got your D. The E is right there. So you got your A, B. And then it began to break. 1, 2, 3, 4, 5. 1, 2. Look at this third wave. Classic third wave. So what's going to happen on Monday? Well, if we go by this reading, on Monday we're going to bounce back to 69 cash. We could touch 69.50 or so. If it bounces back all the way to 71, the wave count is different. Or it may have actually terminated the C. So you got your A, B, C in place, and it's going to continue up with that D, yeah, with the E leg, yeah. But right now, I think there is a better chance to consider this as 1, 2. That's your 3. That's fourth wave coming. Yeah, it's going to be that's now the scales. You're going to have maybe one session of holding ground. In the beginning, maybe a bit of enthusiasm, running to 69. 50, 70, but it will not hold. Coming back to mid-range here. Yeah, you see mid-range running up, coming down. That's your sign you're probably in a fourth wave, so prepare for another break. That break could be as much as $3 from current level. That could be accommodated. It will smash to 63 area around here. And that's it. You got your D. Once it cracks through this level, if it does, in this slide, then you know, no, we are done. We are done with our long-winded price action. Whether it ended here, no, we are done. We are now ready. We're now ready. We are seeing that C down. Okay.